Have you ever wondered who truly benefits from central banks? A provocative question indeed. We're about to embark on an enlightening exploration, delving into the world of private central banks. We'll pull back the curtain on their interests, their motivations, and their beneficiaries. We'll traverse the financial landscapes, navigate the economic undercurrents, and shine a light on the hidden corners of this powerful institution. So brace yourselves for a journey into the untold story of central banks. Join this journey as we unravel the untold story of central banks. The history of central banks is as old as modern economies themselves. They emerged as nations began to understand the need for a central monetary authority to stabilize the economic climate. Over time, these institutions have evolved, some morphing into public entities, while others remain privately owned. Public central banks are typically owned and operated by the government, with the primary goal of maintaining price stability, ensuring financial security, and fostering economic growth. On the other hand, private central banks operate on a profit motive, often having shareholders whose interests they must serve. Regardless of ownership, the core functions of central banks remain similar. They set the monetary policy, supervise the banking system, and strive to maintain financial stability. Yet their methods and motivations can differ significantly, influenced by their ownership structures. While public perception paints central banks as guardians of financial stability, the reality might not be so black and white. Beneath the surface, a different story unfolds for private central banks. These financial juggernauts are not just policy machines, they are also profit-driven entities. Unlike their public counterparts, private central banks have shareholders who, just like with any other corporation, expect returns on their investments. Let's delve into history. The early days of the Federal Reserve, for instance, were marked by significant control from private interests. This intertwining of public policy and private profit can create a tricky balancing act. The question then arises, can these banks truly serve the public interest while also trying to maximize shareholder profit? This potential conflict of interest is a hidden undercurrent that shapes the landscape of our economies. When the scales tip towards profit, the fallout can be significant, affecting everything from inflation rates to the stability of our financial systems. This profit motive, often hidden from public view, can heavily influence central bank policies. When it comes to policy decisions, whose interests are truly at the heart? As we delve deeper into the operations of private central banks, we uncover a complex web of influence. It's not uncommon for monetary policies to subtly favor certain economic sectors or large financial institutions. Take, for instance, the easing of monetary policies. While designed to stimulate economic growth, they often result in an asset bubble, disproportionately benefiting those who already hold substantial assets. In this intricate dance of power and money, the big banks and financial institutions are not mere spectators. Their influence over central bank decisions is substantial, often leading to policies that serve their interests. The policies might appear neutral on the surface, but a closer look often reveals a different story. And what's the outcome? The implications of these policies often widen the wealth gap, disproportionately benefiting the affluent. So we must ask ourselves, in the grand scheme of central banking, who truly benefits? Imagine a central bank that prioritizes public welfare over profits. Envision an institution that is directly accountable to the people it serves and the government that represents them. This is the promise of publicly owned central banks. Take the Bank of Canada, for instance. As a public entity, it is duty-bound to serve the Canadian people first, ensuring financial stability and economic health over shareholder dividends. Or consider the Reserve Bank of India, which has the mandate to regulate the issue of banknotes and maintain reserves with a view to securing monetary stability in India. In these examples, the interests of the general public take precedence over private profit. The potential for democratic decision-making processes is palpified. Policy decisions are made with the welfare of the many in mind, not just the few. A publicly owned central bank can potentially make the dream of democratic decision-making processes a reality. The world of central banking is more complex than it first appears. It's a landscape where interests intertwine and motivations are seldom black and white. While central banks undoubtedly play a pivotal role in shaping economies, it's crucial to delve deeper to understand their underlying structures and true motivations. So as we navigate through the convoluted world of economic decisions and monetary policies, let's not forget to critically assess who really benefits. Next time you hear about a central bank decision, ask yourself, who does this truly serve? Thank you for joining us on this journey through the world of central banking. It's a labyrinth of intrigue and power, and we're glad to have you alongside us as we unravel the threads. If you found this video informative and want to delve deeper into the mysteries of global finance, consider clicking on the video that appears on the screen next. Don't forget to like this video and subscribe to our channel, as your support helps us create more insightful content. We aim to bring clarity to complex issues and prompt critical thinking, and remember, knowledge is power. Until next time, keep questioning, keep learning, and keep growing, because the world of finance and economics is not just for those in the boardrooms and trading floors. It's yours to understand, to question, and to shape. So join us again as we continue to demystify the world of money and power.